Hi, everyone. Welcome to episode 2 of Cloud Accounting Weekly, the podcast edition. We're recording live on CPA Academy, a free provider, or a provider, I should say, of free CPA webinars. Check it out at cpaacademy.org. And thanks for everyone who is listening in live today. It's great to have you here. Cloud Accounting Weekly is a newsletter that's focused on how accountants and bookkeepers are using technology to change the profession for the better. This podcast is the same idea, but in audio form. For the next 20 minutes or so, my guest and I are going to take turns sharing and discussing our top articles from the past few weeks, all about accounting technology. Please feel free to put any questions or comments in the chat, and we'll do our best to respond to those as we go. I'm Blake Oliver. I am the editor of Cloud Accounting Weekly. I am also a manager in the West LA office of Armanino, California's largest CPA and consulting firm, where I work on the outsourced finance and accounting team. My guest today is Will Lopez, the founder and CEO of Advisorfi. Will, it's great to have you here. Thanks for being here. I was wondering if you wouldn't mind telling us a little bit about what you do at Advisorfi.
Yeah, thanks for having me, Blake, and thanks for having me on the podcast. Well, apparently it looks like I have a lot of fun, according to my image that you have on the slide there. We own an accounting firm. Our headquarters is down in Palm Beach County, Florida, and we do basically provide traditional accounting services, but in a very progressive manner. So we're a cloud-based accounting firm down in South Florida, serving clients and companies across 32 states, and some even up into Canada. So basically a traditional accounting firm with a very progressive twist.
Well, and I think one thing that you have done that's really interesting is you've built your own practice management software. Is that right?
Yeah, correct. So right out the gate, I ended up building some software that integrates into Xero Accounting, one of the leading accounting applications, at least internationally, gaining ground here in the United States, and built also a collaborative CRM tool that we can engage all our clients on, which has been very, very helpful for people like me that are trying to work in the cloud and collaborate with clients who are not in front of you.
Awesome. Well, thanks again, Will, for being here, and let's get right to it, shall we?
Sure.
So, you start first. You had this amazing article about blockchain, and I love talking about it. So I'll let you take it from here.
Yeah. So Journal of Accountancy came up with this article in mid-November titled "Blockchain: An Opportunity for Accountants or a Threat," and basically just continuing the touch points of the concept of blockchain. I feel like blockchain has been the accounting word of the month, and you were joking earlier, there's accounting word of the year. So it's one of those things that a lot of people, a lot of CPAs don't fairly have a good grasp on, but yet it feels like it's a threat to the industry. So the article basically touches on how the emergence of blockchain technology has really concerned the CPA industry, but then the more and more we look into it, the more fascinated we are as accountants, knowing that blockchain can really bring even greater efficiencies to the accounting industry, and have more built-in robustness to working with data.
Yeah, so that's the thing I'm curious about, because people who talk about blockchain a lot also talk about triple entry accounting, how this is going to impact, I think in particular, audit work. But I'm not, I've never done audit myself, so I'm not really clear on that. Do you have any insight, for us on how it's actually going to affect us?
Overall, Don Tapscott, who was the author of the Blockchain Revolution book that he had written along with another author, I like his description of how blockchain is basically an incorruptible digital ledger of economic transactions. So how that affects the audit industry, I particularly am not even sure, because even when I was a former financial statement auditor at a large regional firm down in South Florida, but even at that level, we weren't using good tech or solid technology to try to select audit transactions or audit items. A lot of it was pretty much haphazard selections or running through some sort of checklist and picking data. So not sure how the blockchain technology is really going to affect audit as a whole, especially for firms that are not utilizing the tech that's really out there in order to make selections. So blockchain just still continues to be one of those concepts that sounds really good in theory and then slowly is being introduced into the CPA life.
Yeah, one of the interesting things that I heard recently was a Wall Street Journal article saying that um, some of the traders on Wall Street have started using blockchain, or I should say, some of the investment banks are using blockchain as a way to swap equity and derivatives and stuff like that.
Right.
Really complex transactions that would normally take a long time to process, and they're able to do it through a private blockchain very, very quickly. So I'm wondering if that might be where the real benefits start, but it's not in a very public way, right? Um, and I think some banks have also talked about, consumer banks talking about using private blockchains to speed up payments, right?
Hmm. Yeah, it makes sense because I mean, blockchain overall, the concept of it is it's data that's not controlled by a single entity and it's data that has no single point of failure. So, not one side of that activity has control over the entire transaction. So it would speed up things like that, and that's really where I think the blockchain technology is really advanced in trying to speed up the concept of processing.
Awesome. Well, I'm going to change gears here and let's talk about QuickBooks Connect. Now, I know you, Will, and I are going to see each other very soon at XeroCon. And so, since XeroCon is this week, I thought we'd look back first on what happened at QuickBooks Connect. Um, Now, do you use any QuickBooks Online, any QuickBooks Desktop in your practice anymore?
So we don't use any QuickBooks Desktop. I think we may have one client on QBO, QuickBooks Online, but I think have since gravitated away from that.
Got it. So it's been interesting for me working at Armanino because in my previous firm we were almost 100% on Xero. And Armanino is about split on Xero and QuickBooks Online. So I've gotten reacquainted with it. Um, and I started out as a QuickBooks Pro Advisor years ago doing bookkeeping. So it's been interesting to see how things have changed. Uh, I would say that QuickBooks Online has just come light years from where it was 5 years ago.
Yeah, so I
Um,
heard.
and I think they're really giving Xero a run for its money in terms of the speed of development. So I picked out this article, which is Charlie Russell's summary of takeaways from QuickBooks Connect 2017, just published on the Accountex Report blog on November 28th. And he does a great job, of course, of covering all the new features that come out on QuickBooks and screenshots and everything like that. So I was interested to read his article about the latest feature releases at QuickBooks Connect, and the ones that he highlighted are QuickBooks Assistant and QuickBooks Capital. So not actually a ton of new feature releases, but these are pretty big ones. So QuickBooks Assistant is Intuit's chatbot, which is not particularly innovative or new in that both Sage and Xero have released chatbots, I believe. Um, I also find these chatbots to be kind of a gimmick. Who knows how well they're really going to work. I have an Alexa, I have a Google Home, and you really have to know exactly what you're asking to get
Yeah,
anything
exactly.
useful out of it. And the other thing I wonder about these assistants is, right, if the underlying data isn't very good, what's the utility of having an easy way to ask for it, right? Um,
Right.
so we're gonna have to see how well that works. I think it's primarily geared toward the QuickBooks self-employed crowd, and that could be useful, right? Finding out who owes me money, stuff like that could be good for them. But I don't see it really impacting accountants very much at this point. Um,
Yeah,
Sorry, go
it's
ahead.
it's like one of the. Yeah, I was going to say it's like one of those shiny new toys. You kind of using you're using your accounting data, and it's just kind of like the next feature that's a bell and a whistle for the accounting industry.
Yeah, yeah, and and maybe it'll become more useful once the speech recognition and parsing gets really really good, and the assistant can actually understand us better when we type in phrases. But for now, it's pretty much just a different way to get reports out of the system.
Right.
The thing I find that's really innovative is that's coming out of QuickBooks Connect is QuickBooks Capital, which is a lending platform that Intuit has built into QuickBooks. So basically, it uses your QuickBooks Online data to decide if Intuit's lending arm wants to give you a loan, and I believe it's up to $25,000 right now. Now, what's interesting about this to me is that one of the biggest problems small businesses have is getting loans. I don't know about you, Will, but like none of my small clients seem to qualify for traditional loans at banks, and so the way that they tend to raise small amounts of capital is through friends and family or personal credit cards, which is terrible.
Right.
So it's interesting that QuickBooks is going to have lending built into it. This also reminds me of what Square is up to um, with their lending, the credit card processor. So some people find it creepy. Charlie mentioned in the article that he finds it a bit creepy. But I think it's really just another way for Intuit to use data to sell additional services to customers, which tends to be how it works, right? They make a lot more money from credit card processing or lending or payroll than they do from the actual QuickBooks subscriptions.
Yeah, and like you said, it's one of those things that small business owners have a hard time getting. Like you said, a lot of traditional banks are not going to lend to small business owners, so they end up defaulting to personal lines of credits, personal credit cards, and so I definitely think this is a niche in the market that's going to be expanded a little further. I remember probably about a year or two ago, even Wave Accounting announced some sort of a Wave Accounting Capital kind of thing, some lending option towards small business data. And they're even on the smaller side of the micro businesses. I mean, these are freelancers, photographers that probably don't make more than $75,000 a year. So, there's definitely a market for it. And I can understand why QuickBooks would go that direction.
Yeah, and as long as I'm fine with it, as long as it doesn't become predatory, right? That's the
Exactly.
concern that I have is that, if the interest rates are ridiculously high, then really is it better than a payday loan? And based on the demos, it seems pretty reasonable. I think in the example, the APR was like 12%, right? Which is not great, but
Right.
you
But
know,
not terrible.
not terrible. Certainly better than your credit card. So,
Right.
so I'm looking forward to seeing what Xero has to offer as a response to QuickBooks Connect this week, and we'll certainly be covering that on the next podcast.
Absolutely.
All right, next, Will, this is one from you.
Yeah, so payments.com released an article called Accountants Gear Up for AI Disruption. This was back in late October. And pretty much the premise of the article was that Blackline, who's a cloud finance and accounting firm, did a research paper and basically found out that about 3/4 of surveyed accountants are anticipating AI or artificial intelligence to play a big role or significant role in the corporate accounting department. And then at the end of the article, basically they state that it's nothing, once again, just like the blockchain technology, it's nothing that we should, as an industry, get bent out of shape about. But even more than that, it's not something that needs to be feared, but it is something that artificial intelligence, that is, it's something that we need to take time now to understand the implications that it's going to have on our firms, and then try to figure out ways to implement AI technology. It doesn't alleviate all touch points from obviously a person making sure that AI is being instituted. You need to say, "Hey Alexa," for Alexa to work. So article made a pretty decent pitch that AI is going to disrupt the accounting industry, but it still has not fully eliminated the human touch.
Yeah, I would agree with you. I think that the work that it will eliminate is not particularly high value work, right?
Right.
We're talking about transactional coding. That's actually what is currently being implemented right now into both QuickBooks Online and Xero, that I've heard of is the ability to automatically categorize transactions, not just based on what you've done before, but based on what other users have done,
Mm-hmm.
analyzing that bank statement line, right? And I say good riddance to that, right? I spent I spent too many years as a bookkeeper looking at bank statement lines and trying to interpret what the hell that meant, and then doing Google searches to figure out what the vendor did, right?
Right.
And I think if the accounting software can figure that out for us, then I'm very happy to pass that off.
Yeah, absolutely. I mean, AI, it's one of those intelligent tools that, like you said, allows people like yourself and myself to shift our attention from low-level processing tasks to higher-level strategic activities. So,
Yep.
it's going to be a thing, quote unquote, of the future. But it's just really trying to pinpoint those remedial items and getting rid of how to take care of those remedial items in an efficient way, in an accurate way, but yet not eliminate me entirely.
And a lot of people have said that AI is going to disrupt tax and compliance work, right? But I just don't see how that's possible when it
Me
comes to
neither.
businesses, right? I mean, there's just, like you said, there's a personal touch that's required, and so we can simply do more of that. Uh, and when it comes to compliance, somebody has to check the work of the computer, and we essentially already do that, right, with our tax software. Um,
Exactly.
so maybe actually what I would love for artificial intelligence to do is figure out how to follow up with clients in a way that doesn't annoy them. Um, because even our human accounting staff can't seem to do that. So if we could have an AI that's just very, very polite about asking for that W-9 or that 1099 or whatever it is, then I would love that.
Yeah, I mean, as long as I can play 20 questions with my QuickBooks Assistant or my Hey Zero, then I'm fine.
All right, so my next article is called 50% of businesses still use paper checks, but they won't for long. This appeared in CPA Practice Advisor. It's by Lauren Roof. I hope I'm pronouncing that correctly. Um, and there's a lot of vendor. This is one of from Lauren is from Invoice Pay, which is a vendor, and there's a lot of these vendor sponsored or vendor written articles that appear in publications, and a lot of times they're really not that interesting, right? But this one um, really stuck out to me because of the story that it tells about paper checks. And I did not know this, but uh, apparently um, paper checks, the end of paper checks started with 9/11, the terrorist attack.
Hmm.
And how this is all related is that on 9/11, the FAA grounded all domestic flights in the United States, which I don't think has ever happened before.
Right.
And um, at the time, banks were required by law to deliver the physical check um, to clear a payment. So if I wrote a check from my bank here in Los Angeles, and Will, I sent it, Will, if you sent me a check from Florida and I cash it here in California, my bank here in California would have to send that check all the way back to your branch in Florida to complete the payment,
Hmm.
right? And so there were planes just dedicated to this purpose that the banking industry used to fly paper checks, just planes full of paper checks back and forth across the country every day. And when 9/11 happened, the FAA grounded all domestic flights, and those planes couldn't fly. And all of a sudden, billions of payments were held up, and the payments in transit amount, right, which is typically a few $1 billion, just skyrocketed. Um,
Hmm.
and all of a sudden, the banking industry and Congress realized they had a problem. So this inspired Congress to pass a law um, that allowed uh, banks to scan checks and present the scanned images to their fellow banks as a way to settle those payments. So, um, fast forward 10 years later, and I think something on the order of billions of dollars has been saved because of this change, right? So that's the technology, or that's the rule that now allows you to take a picture of a check with your phone and deposit it that way, right?
Right.
When I do that with my Bank of America app, Bank of America just forwards the scan to whatever bank is where the check was drawn on. And I love little tidbits of information like that. I found that really interesting.
Yeah, that is really interesting. I like how they call it a substitute check. What they're basically trying to do is substitute the original with an image. So that's really interesting that something like that would occur, and that would make sense. I mean, obviously there's something going on behind the scenes as far as clearing payments and grounding all the airlines. Man, yeah, that would have caused nothing but havoc in the banking world.
Exactly. All right, so we're almost there. We're at the end. And we've got one more story, Will, that you have brought to us.
Yeah. So Oracle and NetSuite look like they partnered up and they generated a white paper research called the Economic and Strategic Benefits of Cloud Computing. Blake, you and I were talking together even last year, and we were kind of joking around how, the cloud is boring, and, this concept of the cloud is overdone. It's a dead horse. We're kicking a dead horse. But I feel like now more than ever, it's gaining even more ground and being reaffirmed. The mantra of going to the cloud is just being reaffirmed and reaffirmed and reaffirmed. And so what Oracle and NetSuite did was they kind of took 13 respondents, 13 accounting firms between the United States and Canada. Firms that were making 40 million in revenue to 2.5 billion, between 135 employees to 12,000 employees, and basically came to an ultimate conclusion that accounting firms should move aggressively to the cloud now. And so their research indicated that an aggressive strategy to move most or all of an organization's IT systems to the cloud, or an accounting firm systems to the cloud, is justified, and that management should make an explicit commitment to moving to the cloud. And if you don't, you're not going to receive the benefits that they have laid out in the white paper of speed of implementation, scalability, ease of upgrading or upgrades, getting clients on bigger and better stuff, and then as a firm staying agile while the market is changing rapidly.
Yeah, the charts here in this report, and I'll put one of these up on the screen now, are just amazing. This one stuck out to me in particular, the average savings in IT spending, cloud respondents versus benchmarks. It looks like, if I'm reading this correctly, that you can save 21% of your IT spending as a percentage of your revenue.
Yeah.
And per user, down 16% if you move to cloud.
Yeah, it's pretty incredible, the savings that you can get by moving to the cloud. And what I like about this white paper is they kind of go above and beyond the obvious. They point out that there are savings that go well beyond the data center spending, well beyond saving money on IT, well beyond saving money on IT personal expenses, and so on and so forth. So they actually made a fair case in the white paper, in the article, and I think it's once again validating the concept that if you're an accounting firm of the future or accounting firm of today, and you've not made the gravitation towards using cloud-based technology, you're explicitly and intentionally really not progressing your firm. And it's going to be detrimental to firms if they don't move that direction.
Yeah, this is so great. I'm pasting the link to this white paper here in the chat for everyone. And for everyone listening to the podcast, I'll make sure to include the link in the show notes. I think it's really worth checking out. If you are still on the fence about the benefits, this may help push you or other partners in your firm that are still on the fence into making the leap. So that's it for us today. It doesn't appear that there's any questions or comments, but I lost my chat window. So I want to thank everyone who attended, and everyone listening on iTunes or on Stitcher or on Google Play. You can subscribe to us there. And I hope to see you again for our next live session here on CPA Academy on January 10th. And we are moving to a new time slot, something that works out a lot better for me here on the West Coast. We're going to be recording at 2 p.m. Pacific now. So I will not sound like I've just rolled out of bed any longer. And we did have one question come through from Kenneth, and I want to take a moment to answer that. Kenneth asked what blockchain is. Will, do you want to take that one?
Oh, I can. I was going to say, I feel like I would not do justice because I feel like it's still a concept that's pretty nimbus.
And
thought. But go for it.
Kenneth, I want to make I want you to know we're not making fun of you. Blockchain is ridiculously. It's very difficult to explain. I'll try to do it in 1 minute. Basically, think of a public ledger. Anyone can write to it, right? And the problem with public ledgers, of course, in the past have been like, you can't trust what people put in there. They might be lying, right? And a blockchain uses cryptographic, technology to ensure that only the authorized people have the ability to, say, edit a particular transaction or a particular asset. So the implication is that you could basically have a public ledger that is owned by no one. It is owned by the group, and the technology allows that ledger to be actually potentially more secure than if it were held by a third party. So lots of implications around escrow companies. We might end up not having them if we have blockchain technology, that sort of thing. So that was probably a pretty poor description, but it's the best I can.
Yeah, I give the example of it's like a wiki page for data. So, like you said, not one person has complete control over that data point, but it's a shared group thing. It's kind of like the concept of the internet, right? You can't, you don't shut the internet down because you close off your computer, you shut it down. It's there, it's owned by the group, and it's always up.
Yep.
So blockchain technology kind of speaks to that as far as transactional data is concerned.
And I should also clarify that Bitcoin is an application that's built on blockchain technology. So it's just
Right.
one way to use it. There's many, many other potential ways that we probably haven't even thought of yet. And that's it. We're out of time. So Will, thank you so much for being here and being our guest. Hope to have you back sometime. And Matt, I'll let you take it from here.